Life insurance versus the Roth IRA. Have you ever seen this comparison? I haven't in many years. What's the debate? Got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Life insurance versus the Roth IRA. Comparing the two. Which one is better? Now, guys, you might be wondering, how in the world could these two tools, the Roth IRA and life insurance, they're not getting in the ring against each other. Why would they? They're completely separate parts of your financial life, separate tools. And yet, you have to go back to a few decades ago when these actually used to, spar quite a bit. And I haven't seen it in well over a decade where a new client has come in and said, well, instead of a Roth IRA, we're using life insurance, and have had to teach through that. But saw this article recently with this headline and thought, oh my goodness, got to talk about it. So the Roth IRA started, it was legal back in the early 90s, but it really people didn't start using it until the late 90s, but it wasn't even popular then, okay? So I started my career in the early 2000s, and it was like just getting going. People were like, okay, what's this Roth, and how does it work? And now, or the past 10 years, 15 years, we've had this major Rothification, and I've even been teased about having my middle name be Roth, which it's not, but that's how much I believe in. You need to evaluate, should you be using, pre-tax retirement accounts or after-tax, or Roth, which one is best for you? And that depends on your entire financial situation and on changes. And so, but back before Roths were a thing, believe it or not, if you were to look at your financial situation and the tools at your disposal to accomplish tax-deferred or tax-sheltered investment growth and a tax-free withdrawal, what were your choices? Did you have any choices? You might think, no, the 401k and the IRA, that was pre-tax in. Yes, it was tax sheltered, but then when you took the money out, you had to pay tax on it. So that wasn't an option. What about a non-retirement account or a brokerage account or an individual account, whatever? They all mean the same thing. And these were more and more prevalent. Obviously, they're popular today too, but more and more prevalent before the Roth. But here's the thing, with those, there's no sheltering of investment activity. So dividends, interest, yep, they land on your tax return. Capital gains, those land on your tax return. There's no tax sheltering with that. So when you look at the tools before the Roth IRA, you really didn't have one, except life insurance, indirectly. Think about it. Most people, when they think of life insurance, they think term life insurance. Actually, life insurance, there's two major categories of life insurance, and then there's different variations within those two big categories. One is temporary life insurance, and that's term. And there are different variations of term, 10-year term, 20-year, 30-year term. There's annually renewable term, there's return of premium term, so there's variations, but term is temporary. I need life insurance protection to cover goals and my loved ones and replace income and all those sorts of things if I pass away for this set period of time. But after that period of time, I don't need it anymore. So that's temporary insurance term. The other side of life insurance is permanent insurance. And the variations therein are there's just many, but whole life, universal life, variable universal life. And so it's permanent life insurance that actually where you pay a lot, your premium's a lot more because part of that premium is actually an investment. You put a big premium into what's called the cash value, and out of that cash value comes the cost of the life insurance and fees and other things that you pay the life insurance company. But what's left over is invested. It's invested, and it's either earning a fixed interest rate that could change, but just a level interest rate, or it's fluctuating with some investments that you choose, the market, and so on. So permanent life insurance, that actually, as you put money in, this again before the Roth IRAs, but it works the same right now. Put money in, yeah, all that investment activity, that's for the most part, that's tax sheltered, tax deferred. If you do variable universal life, it's sheltered from tax. So then what about being able to access the dollars tax-free? Well, for most life insurance policies, if you draw dollars out of that cash value, oftentimes you're drawing out your basis first, so it works like the Roth IRA for many policies. I can't say for all, but many policies also, when you pass away, that death benefit is tax-free. Not all. There are certain circumstances, but yes, there is a way for that death benefit to be tax-free. So here you go. You're looking at the life insurance, and it does have some similarities with the Roth. And lastly, one more creative way, and again, this is indirect, but a creative way of accessing that investment that hopefully swells up within your life insurance, is you could borrow from it. You could take a loan from it. And in many situations, as you take that loan, that's not taxable either. So yes, before the Roth IRA, permanent life insurance, whole life or variable universal life, actually had some similarities to the Roth IRA. So now, bring it back to right now. Should they get in the ring together? And if they did, who would win? Well, I've already sort of alluded to the answer. We often don't see this comparison anymore. It's been a long time since I've seen this comparison, and that's because you've got to look at, well, what's the job? What's the purpose? What are you trying to accomplish? Because a Roth IRA is a tool. It's very versatile, has a lot of benefits, but it is a tool. Life insurance is as well, and different investments, those are different tools. So what's the job? Because you can't compare a screwdriver to a hammer. No, those are just different tools. What's the job you're trying to do, and pick the right tool for it. If the job is tax sheltered and tax-free growth, the Roth IRA, it's just no comparison anymore, guys. It just isn't. The Roth IRA provides more flexibility in accessing it in your investment choices. It provides cheaper costs. Now, yes, not all Roth IRAs have the same cost structure. It depends on what you invest in and who you're investing with and all that sort of stuff. But it's not going to have the M&E or some of these other life insurance type fees. Life insurance, typically, there's a lot of fees for those. So Roth IRA is going to be more flexible with your investment options and access to it, more flexible or lower cost, typically, hands down. And then also more flexibility in when you access the dollars. Like I mentioned, with life insurance, you could access your basis, you could do a loan. There are some limitations there. And if you wanted to have access to the dollars just at any time or throughout your lifetime, Roth IRA just provides, it's just hands down, it's more flexible, gives you more choice. And so often financial planning is about having as many choices as possible as you are approaching your financial life and making financial decisions. You want to have a lot of good choices and then use a comprehensive financial planning lens to pick the very best choice. Now, I would assume that's the job. What's the best way to get tax-free growth? And to me, it's not even a comparison, not anymore. The Roth IRA is better. And if you're phased out of a Roth IRA, maybe you should be contributing backdoor. Maybe you should be doing mega backdoor. Maybe you should be doing Roth 401k. You got to exhaust all of your options before you would say, okay, well, what about life insurance? Because if the job is estate enhancement, life insurance, hands down, that is the way to go. But most people, when you're looking at your overall financial life, if you want estate enhancement and not temporary insurance but permanent, then it's going to be a lot more expensive. And so many financial professionals believe buy insurance for the time period that you need it, so buy term, and invest the difference. And so if it's just for estate enhancement when you pass away, life insurance may be a better route for you. If you want a little bit of both, I want tax-free growth and I want estate enhancement, then it might be that term insurance and invest the difference. Either way, guys, these are big financial decisions. You got to be working with your CFP, looking at all 6 areas of your financial life to make the best decision. So work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well. Or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.